Tesla reports a 61% drop in fourth quarter profits alongside a surprise announcement. The company will discontinue production of its Model S and Model X vehicles next quarter. So the question is, why is Tesla ending two of its oldest and most premium electric vehicle lines? And what does the shift to producing humanoid robots at its Fremont factory mean for the company's future? Let's solve this equation. Welcome back, strategists. This is the Resource Equation, your briefing room where data, capital, and strategy collide. New here? Subscribe for weekly breakdowns of what's really moving markets. On January 28, 2026, Tesla CEO Elon Musk announced during the company's fourth quarter earnings call that Tesla will cease production of the Model S sedan and Model X SUV in the upcoming quarter. These two models, introduced in 2012 and 2015 respectively, represent Tesla's original premium offerings. Musk described the decision as giving these models an honorable discharge as the company pivots toward an autonomous future. Production lines at Tesla's Fremont, California factory will be retooled to mass-produce the Optimus humanoid robot, with a long-term goal of building 1 million units annually. Tesla's fourth quarter financial results underpin the announcement. The company reported a 61% year-over-year drop in quarterly profits, falling to $840 million. For the full year 2025, net income declined 46% to $3.8 billion, marking the lowest annual profit level since the pandemic 5 years ago. Revenue from car sales fell 11% year-over-year, and sales declined in 3 of the last 4 quarters. This marks the first annual revenue decline in Tesla's history, signaling significant challenges in its core automotive business. Here's where it gets interesting. Despite these declines, Tesla's stock rose slightly in after-hours trading following the earnings report. Analysts noted that gross profit margins improved from 16% to 20% in the last quarter, surprising some observers. Additionally, Tesla announced a $2 billion investment into xAI, Elon Musk's artificial intelligence company, and plans to release the third generation of the Optimus robot later this quarter. These developments suggest a strategic realignment focused on robotics and AI, beyond traditional electric vehicles. Surface level, Tesla's decision to discontinue the Model S and Model X reflects the aging status of these models. They have been less competitive compared to newer Tesla vehicles like the Model 3 and Model Y, which sell in higher volumes. In 2025, Tesla delivered 50,850 units combined of the Cybertruck, Model S, and Model X, a 40.2% decrease from 2024. The Model S and X likely accounted for around 30,000 of those deliveries, underscoring their declining sales relevance. But dig deeper, and this move signals a broader shift in Tesla's corporate strategy. Musk emphasized a future based on autonomy, self-driving vehicles, and robotics, as the company's core mission evolves. The Fremont factory's conversion to produce the Optimus humanoid robot represents a bold pivot into a market where Tesla currently holds no commercial presence. The company aims to unveil the mass production-ready Optimus Gen 3 this quarter, with ambitions to scale up to 1 million robots annually, a scale comparable to major car manufacturers' vehicle output. Pause here. Does this shift from premium electric vehicles to humanoid robots make sense? Drop your take in the comments. Tesla's announcement also carries implications for its customer base. Musk encouraged potential buyers interested in the Model S or Model X to place orders promptly, as production ends next quarter. He assured current owners that Tesla will continue supporting these vehicles for as long as people have them, though details on the extent of this support remain unspecified. Remember that question about why Tesla is betting heavily on a product that does not yet exist commercially? We're getting closer. While the Optimus robot project promises to transform Tesla into a physical AI company by the end of 2026, the transition carries significant risks. The robot market is nascent, and Tesla's track record with ambitious product timelines suggests caution. Moreover, the company's automotive sales have faced headwinds from increased competition, brand perception challenges, and external factors such as geopolitical tensions and customer sentiment related to Musk's political involvement. Quick poll. What matters more to you? Tesla's declining car sales or its pivot to robotics? Back to our opening question. Here's what we now know. Tesla is discontinuing its Model S and Model X lines as part of a strategic pivot from traditional electric vehicles toward autonomous technologies and robotics. The company reported a sharp profit decline but simultaneously announced investments in AI and robotics that could redefine its business model. However, uncertainties remain about the commercial viability of the Optimus robot and how this shift will impact Tesla's market position. But wait, there's a twist. While Tesla moves away from its oldest and priciest models, it continues to invest in new automotive projects, like the Cybertruck and robo-taxi services planned for cities including Houston and Miami in the first half of this year. The company's Amazing Abundance mission, replacing last year's Sustainable Abundance tagline, reflects this broader ambition to integrate AI and physical robotics into everyday life. What comes next? Tesla is expected to release the third generation of the Optimus robot within this quarter, a critical milestone toward mass production. Upcoming quarterly earnings reports will provide further insight into the financial impact of this strategic shift. Additionally, how effectively Tesla manages the transition at its Fremont factory will be closely watched by industry analysts and investors alike. How do you interpret this major pivot by Tesla? Who stands to be most affected by the end of Model S and Model X production? What signals will you watch as Tesla tries to redefine itself as a physical AI company? Let me know in the comments. And if you found this valuable, hit that like button. Now, while Tesla's transformation grabs headlines, there's another equation being solved in real time. Why SanDisk, ticker SNDK, is leading the S&P 500, and how the shift from AI training to AI inference is creating massive structural demand for flash memory. This connects directly to something bigger we covered recently. If today's story matters to you, you need to see what we uncovered there. Link in the description. Watch it next. Subscribe to the Resource Equation for weekly breakdowns like this. Next up, a deep dive into semiconductor supply chains and their role in the AI revolution. See you in the next one. A quick reminder, this video reports and explains public information. It does not offer investment advice.